Okay, so it was busy night, wasn't it? We saw the uncertainty coming back to the markets once again, which I believe, by the way, will probably get somehow um, easier and softer maybe on the coming days as we have the non-farm payrolls as the market will start to get ready for the non-farm payrolls. By that, very likely to reduce its volatility and its movement, and see what's coming from the non-farm payrolls. Why? Because as we already talked about, market is waiting to hear what is going to be the next step of the Federal Reserve. Everyone was expecting for increasing the rates, right, the hike of the rates, but after Brexit, it more feels like and looks like it's going to be exactly the opposite thing. So let's quickly go over the trades we have, and let's talk about the trades we are going to have. First of all, let's start with the New Zealand dollar, the investment one. We have 071 70 area, right? That's the place right here. We can move the stop already to break even from up on a few, and to reduce the risk. The reason for that is because we are below the resistance, well below the resistance and the gap area, which was here, right? It was closed. And the 20 MA is right in this place. If we drop to 1 hour chart, we start to have this trend line, which very likely would be respected if this move is for real. So from my point of view, we can reduce the risk, and even though it's investment, yeah, that's true, and still it's maybe better thing to do to reduce the risk. And the reason is only if the things go nuts after the FOMC, maybe we might get something like that. And if we do, we will of course look to sell the new highs. As I explained, I believe, not once, um, the higher we can climb, the stronger we can drop, especially when we have such divergence developing at the end of a cycle, which in our case is triple. So move your stop to break even. In short, that was a quick explanation why we can do that. But the euro dollar, I wouldn't intervene much yet. And the reason is basically because the euro, I wanted to cross this area first of all. Then we can intervene as well and free the risk. But currently the euro is able to do that as well. So I am good to go with every of this scenario. Of course, just one to hold. So here I wouldn't make changes, to be honest. Okay, so we hold our short as well. Next one we have running is the Aussie Kiwi, which this morning with the drop of the New Zealandian, right, made a beautiful rally. The great momentum for this scenario would be if the pair can break here and get this convergence momentum after the false break. Remember we spoke about this kicker, guys, right? It was on daily, but it started here, right? It was a really nice kicker, very powerful pattern which happened. So if we can get the convergence now, and just want to remind what is the principle of convergence. After, at the end of a cycle, which in our case was the daily cycle, I'll show in a minute, right? When we have a reversal coming from a false break, right? And then it gains the momentum. Gains the momentum means false break that the bears giving up, and higher highs, which means bulls coming in, normally of course. That case normally provide an opportunity to go for something deeper, and we will be looking for something like that to happen right from this area. So we will want to get this convergence completed, and that will be a very, very good sign. We are anyway in as an investment, so we are holding here. No real changes for this pair, just an update. Keep it going, keep it running, and this is the cycle, of course, I refer to. One, big two, coming with a range, and ending. This is a special cycle, and for special cycle I want to remind you what it is. If it's a bearish, right, it's like this. This one equal X. This one could be twice or thrice X, and this one to be X as well. X means by size, right? So approximately, in other words, this and this should be equal by pipsage and ideally by the way it develops. And this should be twice or thrice bigger, right? That's what we're looking here. We got a divergence. We got a confirmation from weekly, of course, by bullish hidden divergence, right? So if there will be no surprises, the pair should make the rally. And even if not from here and suddenly drops lower, fine, we are still on a bullish mode. Plus, don't forget, guys, where it all started from, and this is the weekly cycle, of course. And I refer to the special cycle we had. This is a monthly chart, sorry. That was another monster X, so that twice X, even bigger, and another X. So a special cycle on a monthly chart. After that, we would expect for a correction. So correction could come as a play in a range, or correction could come as this, which actually I believe would be what happens. But there is one problem with that. This is a monthly chart, right? So that's going to take time. I just show you that so you remember where it all comes from. Now, is it possible we'll have one more false break before the rally? The answer is yeah, it's possible. Because if it's a ranging pattern, we did have one false break on the bottom, one false break on the top. Up to two more false breaks would be acceptable. So we could, if there will be some surprise from Australia or from New Zealand, we can have one more fake break rally, and then we expect it to rally back toward 114. Doesn't matter really how we turn it around. Bullish pressure is well felt here. What we need for the short term is the convergence, correction, and continuation rally. So that's for this pair. Sure, Aussie dollar, we have our short going from yesterday. I think it was yesterday. That was the breakout. That was the reversal. I got a trigger 070. 507. Got lucky because it was kind of right on the 50% retrace here. Not more, not less. Pretty much exact. We got a convergence here, so it was a good reason, and we are dropping down. Cashed out part 1, 4 pips before we reached the official target of 74.50. I asked you to close a bit earlier for one reason. We started to create kind of a double bottom with a bullish divergence. Why to fight for 4 pips, right? That's not the goal. That's not the idea. For long run, we are risk-free. We are below the gap. There is nothing really to worry about technically. Nothing stands between us and the continuation, and there is a very good chance that this is kind of a head and shoulders pattern, which means we are going to try and visit once again on the neckline. And if it managed to break it, even greater, and that's what we are after here. 072, even lower. Okay, so that's pretty much our entire plan. Yeah, it's gonna take some time. This is a daily chart. We are risk-free, so I think that's the most important thing, basically, in the situation. We don't want to stay in a risk, and try to enjoy the higher reward possible. That's all. Any questions for now, guys? Any of the charts we spoke about? Any questions? Anything not clear? Okay, seems we are good. All right, then we have the New Zealandian Canadian, which we got in yesterday evening. This is the one. Okay, that was our plan here. Let's quickly cover what we have. We had one false break coming right here, and one false break coming right here. Two false breaks, each under bearish divergence. This is a very serious sign normally of bulls giving up. We want to confirm such things by changing momentum, which we did by breaking this bottom, right? We got the break, we got a 50% retrace, that's what we got in, right? That was 0.9275. It began to be brutal, to be honest. The beginning was this crazy rally in the pair. Gain suddenly, it was brutal, looked like what's going on. Maybe we're going for another false break, but probably the forces of the convergence, which we saw here, right? This is the convergence we got. Lower after the false break, followed by divergence, we got lower lows, right? This is the sign I'm talking about. That's what we want to get. That's the principle of convergence. That's what we are experiencing here. Retraced, moving down. So far, so good. No need to change nothing as for now. The only thing to do in this place is break even. We are in from this place of 92.75. That's way below the 4-hour chart 20 MA, which is the dynamic resistance for us. We are now building this trend line, right? And it remained below our entry. So we are good to go with this protection. Now, if we take a look on terms of cycles, the next place we are going to pay attention to, we are now on the 100, right? But 100 we don't pay attention here. Why? Because the legs are not equal. And of course we don't have divergence. So the next important thing for us is probably going to be something like that, would be around 0.92. There, we will have to stop for a second and see what is going around the pair. Of course, all assuming and relying on the fact that the pair will not have any crazy surprises and kick us on break even. Okay, in that case, if we continue to this place, if there will be divergence developing on the 161.8, we'll have to respect it and start to cash out slowly. Part 1, of course, only part 1, because for the longer run, we still want, okay, this to happen, and that's basically the 0.90 area. That's the 38.2 of this double cycle. That was the double cycle I referred to, of course, right? The big one. Okay, like this. So that's pretty much what we have for this pair. That's why we entered the short. Of course, it also followed a divergence. It was very good daily confirmation for us. So if there will be no crazy surprise from the pair, which could happen, okay, we should remember the most important thing. We are now on unfirm payrolls week with all that comes with it, right? with all the risk and the craziness and zigzags coming with it. So we have to try and free the risk as soon as possible, just not to keep the money in the risk on any surprises to come, which again could happen. So that's about the trades we have. Quick update, maybe not that quick, sorry, but that's basically all the things we have. Now let's cover the opportunities we are after. Pound, euro pound. Since the rally is straight, good. We're not going to force anything on this situation. We are very close to 0.87, which very likely is going for an extreme resistance as well, and the daily divergence, an extreme, okay, which is forming right here. Don't push the button too fast. We will need false breaks first of all. Now, assuming we already had one, actually we did. Let's take a look on deeper view here. That was the high. No, we didn't have any false break yet. See, it was dancing on the same area. No, but we did have one here. Yeah, we did have one false break. So based on that, we will need to get one more false break like this. After we complete that will be the two false breaks, and we are looking for at least two false breaks, right? It could be more. After it will happen, we are going to look for changing momentum by creating lower lows, and then we are looking for two wave pullbacks on the lower time frames, and we are looking either to go for sell here with false breaks on lower time frame, 1 hour chart, or even lower, or with the breakout and retrace. And then we are after the correction we would expect to happen, probably all the way to this gap area. Okay, so keep an eye, guys. That could happen any moment with the moves we have. Now, if we observe the tops for this pair after we are over then the beginning of the week, of the month, first and third, fourth already over, the next important areas to pay attention to would be 13, 14. That's actually going to happen during the next week, exactly, right? So that's the time we would expect the false breaks to appear. In other words, can we still go and enjoy some buys? The answer is yes. But for that, we need two waves down. So if we can get 1, 2, 3, 4, we can go and try the rallies, of course. There is a very nice trend line going right now, which you can rely on, of course, and respect and give it the chance to help you dynamically trail this opportunity. This is a kind of a chance for the short-term traders of you guys. Okay, that should be a good one. Gold is coming to the area we would like to see as well. This area I am talking about is, it's actually right now already on the 61.8. Okay, and if we take a look on another cycle for the duplication, it's already right here. So we are on a very, very powerful zone for a potential reversal, of course. On the 4-hour chart, we need false breaks. So far, we didn't have even once. Okay, there is no false break right now. So we will need to go and get below this high first of all. One more push and false break. Okay, so let's put the lines here, something like that. Close below, one more fake break, and then that's what we are going to do. Sell right here. Okay, this is pretty much the plan we will have on this place. Does it really worth to try longs here? About that, I'm not quite sure, because the divergence developing is really serious, and it's really like potentially ending. There is theoretical chance we are straight to 1420, 1440 before the next serious down move taking place. But again, anyway, without two waves down, there is no reason to go for a sell, for a buy, sorry. So on short term, the only buy I can think about would be something like two waves back. No, I don't like this spike, it's too far. Go back to this trend line that's around 1360, 1350. If here we can get something like that, let's put the lines. Boom, boom. Then we can try the buy of this long, because the risk would be small, and until the false break created, it could be still some good time, right? And that could be pretty nice risk reward opportunity. If that happens, we can try longs, but beside that, yeah, really doesn't worth the risk. And we are waiting, as I said, for the false breaks to happen. Once they do, we are going to attack. If we take a look on the gold and on statistical tops, we can see first, third, sixth are very powerful days. We are actually now on 7, no, we're now on 6th of July, which could be, you see, funny, but it could be where we will start to get the false breaks as well, right? If not here, the next date would be only 14th, and if not, only end of the month. Okay, so that's where we will. That's pretty much the days we are looking for our false breaks and the attack for shorts. And okay, dollar Canadian. Yesterday we've been talking about what we want to happen, right? So far, it follows beautifully, right? So we will want one more false break with divergence, right? And then on the short term, we can try this sell back to here, which after we are probably going to long again. And all that, of course, is relevant as long as the market respect our plan and we have the non-farm payrolls to come, right? Those things could develop a bit different, right? So we are going to play here safer for sure. So for short term, we did have one false break. If we have another false break, that's a good short. And if you observe here on the 15-minute chart, that's pretty much what's going to happen. Boom, 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 boom. False break. Then we will need to break below this bottom. Boom, 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 boom. And then we can try these shorts. Okay, that's pretty much the plan we can follow for the intraday trading. If it develops this way, great, we can go and trade a short there. Again, most important thing, guys, and remember that always, is to get good risk reward from your entry to your desired target. If you get a good risk reward there, you can definitely try. If not, why to waste your time? And remember, we start from great risk reward for one reason, because even if the things develop the other way around, right, we still get at least 1-to-1, 1-to-1.5 before we cashing out or changing the plan, right? And this is the idea of the risk reward. Not just give you the best possible reward, but also give it to you on the right time for a change. I mean, on the right timing and the portion on the change. So even if you will have to close before it reaches the target because you have divergence against you or cycles change, whatever the reason is, you still get good risk reward. So the starting point has to be the bigger the possible. Okay, that's pretty much the reason why. We play here at the end of the day game of statistics for to be profitable based on statistics, we have to respect the statistics and the numbers, right? Remember that, guys. Oil would be the last one. Where is that? Oil. Here we go. Oil looks like going to continue all the way to the 44. It is doable. It is doable. We have the trend line, which is respected. I want to see the price trying to get closer before shorting that. So the plan, I don't know how crazy it sounds right now, but the plan would be to get this. If we can, okay, getting closer to this trend line, then yeah, it does make a lot of sense to try this short, aiming the 44, a double wave duplication on the daily chart. If not, I wouldn't really waste any time and energies and money on any other opportunities. So patience here, I think it's much more required. Now for the short term, can we try longs? It's part of the like the dollar cuts, and the answer is yes. We had one false break. If we have another false break, we will, after momentum will change, retrace, breakout, and you can go then and try to buy, aiming back to the trend line we have been talking about. And remember, all about risk reward. That's all. Any questions, friends? Anything on your mind? Okay, wonderful. Then thank you very much for attending. I wish you a wonderful day. Good trading, and I'll see you on Skype, and I'll see you later on the US session. Thank you, guys. Enjoy your day. Bye-bye.